Hey guys, this is Market Update. In this video, we're going to look at the Bitcoin halving, which is 50 days away. How does the market usually react? And what is the data saying this time around? The Bitcoin halving in April will cut the supply of new coins in half. Currently, each block creates 6.25 new coins that will get cut in half to 3.125. So there is a difference in the supply and demand dynamic. There is a reduction in the supply of new coins, and if demand stays equal or rises, then you should expect the price to rise. However, because the vast majority of Bitcoin supply is already in existence, these halvings have a less effect now than they did in the past. But what is also very clear at this point, after 15 years of data, is that the thing that really drives Bitcoin's prices short term is central bank cycles. Central banks go through these very distinct 4-year cycles of debasing their fiat currencies. And so what they try and do is create a slowdown in the economy to crush inflation. And that gives them the cover to, under the surface, create tons of debt at lower interest rates and try and essentially debase their currency to pay for all of the things that they want to pay for. Remember, the vast majority of countries simply cannot afford to pay the bills that they have racked up, either from war or from bribing voters to vote for them, saying that they'll give them handouts. All of that is unaffordable. And the only way that they can afford to do that is by creating these cycles where they try and raise as much debt as they can at lower interest rates. However, the market knows this. And what this dynamic does is essentially over time, with volatile cycles, debase the fiat currency and rise the price of desirable assets. And the Bitcoin halving plays into this. But if you look at liquidity cycles from central banks, they are the things that affect Bitcoin's price to the up and downside in these short-term cycles. But what they cannot control is the long-term fundamental adoption of a network that has a desirable asset that people actually want to buy over time. So yes, Bitcoin is going up over time with distinct cycles in between. This is the liquidity cycle that you can see here on the bottom. It looks at the Chinese 10-year debt instrument, it looks at the dollar index, and it looks at high yield spreads. So this is a chart essentially of risk on and risk off cycles. And you can see each time this white line goes into above the pink line right here, that's a risk on cycle for risk assets. Essentially, the currency is getting debased. And so they're pushing this money into the market, and that pushes up asset prices of desirable assets anyway. These coincide with big bull markets for BTC. So you can see this one here, and then we cross over here. That is a bull market. As we cross down back through, that's the bear markets for Bitcoin. We have another one that lines up perfectly here, and another one which was the previous bull market. And it looks like we're just crossing into the risk on phase again. And this was done earlier. Bitcoin has now come up from here. So Bitcoin follows the macro cycle and the 4-year cycle of currency debasement from central banks. This cycle is definitely different than before. Interest rates are higher now than they've been in a generation, and they may stay there for as long as political tensions exist. And will that affect this cycle of Bitcoin? Not in my opinion. I don't think Bitcoin cares about interest rates. What Bitcoin cares about is currency debasement, and that is happening at a very, very fast rate. You can debase currency via 2 ways. The first is monetary policy, literally printing money from the central bank to buy debt. The other one is taking on huge fiscal deficits. That's when the government actually creates debt and then spends it itself. For example, if you want to go to war or you want to do anything else, you have to create debt. And so that is fiscal stimulus. Each one of those debases the currency and makes it weaker. The reason why I say interest rates do not affect the price of Bitcoin, this is Bitcoin priced in dollars in blue, Japanese yen in white, Turkish lira in red, and then Argentine peso in this turquoise color. The Turks and the Argentinians have very high interest rates, but that hasn't stopped Bitcoin gaining more value versus their currencies versus these two, which have much lower interest rates comparatively. Bitcoin doesn't care about interest rates. It cares about debasement of currency. And these currencies are being continually debased over time. It's not a new occurrence. This has happened to fiat currency since the dawn of time, and it will continue to happen. So long-term versus short-term. Short-term cycles, it still doesn't care about interest rates, but long-term currency debasement will force the price of desirable assets up. The Bitcoin price usually tops out around 300 to 500 days after the halving. You could say it's the halving or the economic cycle. It's all the same trade. So that would put us in around spring 2025. So for right now, we are in an expansion phase. You can see the very distinct cycles here. So there is a big drawdown during a bear market, a recovery, and this is still the recovery here going into the halving. After the halving, not much happens for a month or so. And then something happens and pushes Bitcoin right into new all-time highs and expansion and price discovery into whatever the high may be for that cycle. So this could be the dropping of interest rates. It could be huge refinancing by governments who, through that refinancing are debasing their fiat currency once again because they are creating new currency obligations to pay others that they've taken previously that they can't afford. So debt upon debt to pay off the previous debt. This is debasing the currency, the trust within the currency, which pushes asset prices of desirable assets higher. So 300 to 500 days would usually be some sort of peak for the price of Bitcoin, and altcoins usually follow this with outperformance towards the very later stages of a Bitcoin bull market. We'll go through that in a second. You can see this here. Look into Bitcoin is free, so go and use it. This is growth since cycle lows. The black line right here is the current halving cycle. And we can see that usually it's around here, 500 days or so after that you get some sort of peak. However, it can really go on long to 1,000 days. So timing is pretty difficult here. However, generally the trends right here are that we are still in a recovery and we haven't broken all-time highs yet, at least. And so we're not in price discovery. That can last for 6-8 months of very, very volatile price action with big moves to the upside, drawdowns of 20, 30%, and then other big moves to the upside. Gets a bit crazy at that point. We're not there yet, but man, time is running out, right? If you're looking to buy a Bitcoin or trade, buying when prices are in price discovery going up, that's not the best time to buy. That's actually the worst time to buy when you're getting late in these cycles. You don't want to buy at high prices. You want to buy at low prices when everyone's scared and saying Bitcoin's going to go to 10K. Yeah, you got to be dollar cost averaging there if you want actual returns, right? And so when prices are going up, for an investor, it's kind of bad news, right? But right now, we are still within the kind of first stages, but time is running out very quickly. And during the next year or so, you should expect, if we follow previous cycles, big moves to the upside, which start to bring into play longer term investors taking profits and prices where you've got to really think twice about if you really want to go in heavy, because the next part of the cycle after the peak is usually a drawdown. So it's an important time to be aware of exactly what you're trying to do and your time horizon. The market consensus for Bitcoin's price this cycle has it topping out around 100 to 150K. Pantera have it at 147, and they see two distinct phases within each halving rally. So the first is the recovery phase, where you get a very decent move up. And that really tells the market we're not going down anymore, right? The cycle has turned. But then you have the halving and then the big price discovery after. So Pantera have this as around a 4x gain from the halving, and they thought the halving would be around 35,000. We're ahead of that. We're already at around 50K, and that's because of the ETFs being allowed and the market obviously trying to price that in. But 150K from here, would be around a 3x. And so they can see that these phases take around 450 days each as well. So you can see that right here. So they're looking for, let's say, just over a year after the halving, topping out around this price. Diminishing returns are real. The percentage gains that investors are making are coming down, but the amount of nominal dollars, actual value that Bitcoin is adding to its market cap is going up exponentially, right? For every few percent that the price of Bitcoin moves, you're actually adding billions of dollars to its market cap. So the nominal value of Bitcoin is going up. The percentage gains that you can make from investing are going down over time. However, this asset is still the best performing large scale asset in the world. Time really is running out to have purchases that are decently priced in this cycle. After we get past a certain period, prices really are not attractive for the long-term investor or the short-term trader. The absolute worst time to buy Bitcoin is during price discovery mode when you're reaching, new all-time highs. That has typically been a very short period of huge growth followed by a massive bear market. And so it's not logical to put a lot of money into Bitcoin in its massive price discovery phases. That's the worst time to buy because you're buying at the highest price. The next phase is a bear market. And so for long-term investors, you just have to stomach that and pay the higher prices or not buy. For short-term traders, trying to buy and go long an asset that is in its price discovery phase and the next phase is a bear market is also a very dumb trade. What we can see from long-term holders is they tell us exactly when Bitcoin is peaking out in relation to its cycle. This is long-term holder supply, and you can see that it dips when short-term investors come in and bid the price up. An all-time high, break of the previous all-time high, that's when long-term holders distribute their coins. Short-term, the traders that pump the price up get what they want, and then that phase is over and the Bitcoin price draws down. Long-term investors start accumulating again. As the price here breaks the previous all-time high, that's when long-term investors start distributing, the price peaks, falls, and long-term investors start accumulating again. You can see here the price breaks the previous all-time high. Long-term investors start selling and distributing their coins. They wait for the price to fall and for short-term investors to unload everything that they've got, spend all their cash, cycle turns, they start investing again. Interestingly, it looks like we may be seeing the start of long-term investors actually distributing some coins here. It's unclear at this point whether this is just a dip with maybe a potential rise again. We don't really know. But if you want to find out where the price is in its expansion phase and within around a 6 to 8 month period should start topping out, you can see what long-term investors are doing. When long-term investors are getting incentivized to sell their coins, that usually means that there is distribution coming onto the market and the buyers are going to get filled. And once they're all filled for that cycle, then the price comes down. So it's just simple supply and demand through cycles. There will be a lot of narrative around the peak of this cycle that this time is different, but it never is different. The Federal Reserve controls the price of assets in the short term, and they do so in order to help the Treasury fund the government, which they spend way more than they earn. And so they have to fund the government, create inflation, which is the debasement of currency. And then when prices are pushed up and everyone realizes that their currency is getting debased and they can't afford as much as they did previously, that's when they have to come out and pretend like things are bad. They have to rock the market again, try and create some sort of growth slowdown in the economy and go through the cycle yet again. It happens every single time. Bitcoin is a reflection of that and it's not a company. Therefore, these cycles will always take place. We can also see when the market is overheated by MVRV. MVRV simply shows us where Bitcoin is being moved in relation to its previous price. And so when MVRV is very high, that tells us that long-term investors are releasing their coins and the coins are being spent at ever higher prices. They're getting incentivized to sell their coins to new holders. When MVRVZ peaks, that is the top of a bull market. When MVRV gets to around 6 or above, that typically shows us that the market is in a frenzy. Short-term buyers are paying up for the price of Bitcoin. And eventually the next phase is going to be to the downside as all of those short-term investors get caught on the wrong side of a cycle, as they always do, and then start capitulating. So that's where short-term traders can actually tell us, as long-term investors, when the price is not actually very good for us to buy at, and that the next phase is going to be an area where we want to be active. Right now, MVRV is around 2, so still very early in this bull market. This usually spikes up very quickly. Doesn't usually go up in a, kind of a step fashion. It usually just peaks as something happens. The market rushes in, pushes up to about 6 or 7. Long-term investors sell or don't buy, and short-term investors or short-term traders get caught at the top of a bull market and then have to capitulate on the way down because they're on the wrong side of a trade. So this can tell us where we are in the market as well. Anything under 4, you want to be buying. Anything over 5, 6, that's when prices are way too high. Another way to try and understand where we are in the cycle is looking at how altcoins perform in relation to Bitcoin. Altcoins usually outperform Bitcoin in the second phase of Bitcoin's bull market. So Bitcoin recovers. It has its huge expansion. Altcoins actually do take market share, though, in general, simply because there will be a flood of new coins, new ideas that come to market that have higher valuations, but ultimately in the next drawdown phase, draw down 90+%. However, over time, the sheer amount of coins is increasing the market of altcoins in relation to this one asset, Bitcoin. But if you're looking to understand where we are in the cycle as well, you can look at all of the on-chain stuff. But if altcoins and Ethereum are really outperforming BTC and the narrative really is on them, that typically means we're in the latter stages of a bull market. And if you've been accumulating during the bear phase, you can make some decisions about, do I want to sell and take some profits here? Do I want to keep everything? Or, do I just want to keep buying? Well, buying right at the peak of a bull market in the latter stages is not a great idea because the next phase is a drawdown. So you can just look at the narrative that's playing out. And if altcoins are actually starting to grow a lot of market share, that's when typically the narrative online gets frenzied and everyone says how much money they're making and all of these new ideas. And that's when FOMO comes in and you start putting money into these things because they're going up in price and you want to make money. But underneath the surface is that these things are massively overvalued. And in the next phase, if there's a drawdown, they're going to drop 90%. And so that's just the worst place to be. You don't want to be in that trade. So you either make your trades early in the bear market or the recovery and then see them out and sell, or you just sit it out and understand that if altcoins are really outperforming and there is this frenzy online, that's typically the area where you're late stage bull and the next phase is not pretty. We can see that here from the Bitcoin, ETH, and altcoin charts as well. Coming into the halving, we are coming out of the recovery. The next phase is a potential massive bull market with expansion of price. But after each recovery and expansion, that's when a drawdown can occur. And it's not going to be different this cycle, in my opinion. Everyone thinks it is, but it's exactly the same. Like I said, these assets are a reflection of central bank policy as well. This is Ethereum, expansion, drawdown. We have the recovery. We're just coming out of it now. And so we're looking forward to hopefully an expansion. But if we are up here, the next phase is not for an expansion. It's impossible. So just be aware of that. If you look at altcoin market cap as well, it's looking primed. So this is the previous drawdown. And then you have the halving here, the Bitcoin halving. And then, things go into an expansion. We've had the drawdown. Looks like we've broken through that already. And so again, tracking Bitcoin, it looks like we're performing like a little bit ahead of schedule here, which can be dangerous short term because you can definitely get drawdowns back to trend. However, after the previous halving, you can see what happened to the altcoin market cap. And that may happen again here to new all-time highs. We're around that stage, right? But this is when short-term trades become ever more risky and ever worse in their risk reward. Because if you're buying long, the next stage is for a drawdown. So just be very sure where you are. If you're trading, you need to be ahead of the market and not with it. Everything looks really, really positive for Bitcoin, for ETH, for altcoins, for a big expansion in price versus dollars. If you're not a professional investor, if your actual job and you don't get paid for being a hedge fund trader or something else, don't try and be one. right? It's like if I put on an England kit and went to the World Cup, right? I'd just get absolutely wrecked. I'd be destroyed, right? Because I'm not a professional. And so if you're not a professional trader, trying to be one in your spare time is a really, really bad idea. Luckily, we don't have to do that. Bitcoin's 4-year CAGR is 50% per year. So we'll look at Bitcoin first. What CAGR means is it's compound annual growth. It simply is basically a dollar cost average strategy. So if you bought Bitcoin once a week and you smash buy once a week and you bought the absolute pico top right here, and then you bought this one right here, right? The worst time to buy, but you bought then and you bought the week after and the week after and the week after for 4 years, despite the pico top and then the drawdowns and everyone saying it's going to 5K, you made 50% each and every year on the money that you put in, a 50% compound annual growth. You don't need to be a trader. The S&P is annualizing at like, 10, 12%. The NASDAQ is annualizing a bit more, like 17%. Bitcoin's annualizing at 50%. You don't need to be a professional trader. You don't need to be clever and outsmart the market. You just need to allocate to the asset that's going up 50% a year. Buy every single week, at the peak, at the bear market, doesn't matter. 50% a year you make. From all of that narrative and all the nonsense that's gone online, it doesn't matter. You've made 50% a year. For Ethereum right now, the CAGR is 86% or 90%. Ethereum is earlier on in its growth and it's more volatile, but you're getting a 90% yearly return. That is buying ETH, right, when it was $150 and $4,500. Buying that, even so, and the big drawdown we got to like $900 this cycle, you're doubling your money each year over those 4 years. That shows us that if we're consistent and we understand what are the strong assets and we just take our fiat and put it in those assets over time, and we have actually a long-term time horizon, 2 cycles, 8 years, you can make massive, massive gains if these assets keep growing. I think they are going to, but of course we're not sure. I think that these assets are stronger than fiat currency. They have a lot of growth, right? People are building on them and there's growth there. If you just buy strong assets over time and dollar cost average them, especially in bear markets, you're going to outperform every hedge fund manager in the whole world. They don't make returns like this. You don't have to be a trader. You don't have to try and time it. You don't have to get into something. You can do that if you want, maybe with 10% of your bag. But these assets have the growth. You don't need to try and trade. You can just simply dollar cost average over time, and there's enough growth in there that's going to give you a really good return. And of course, you can make a decision about how much of your portfolio you put in, maybe 1%, 2%, maybe 100%. That's up to the individual. If Bitcoin breaks $69,000, then it will reach new all-time highs. It's already at highs with many other currencies. Many people will be buying Bitcoin there. For every buy, there's a sell. If you're buying Bitcoin at highs, just understand where we are in the cycle. If you're okay holding on to Bitcoin for another 4 to 8 years, and that you're taking the amount of risk that is appropriate for you. I can't give any specific financial advice. If you want more info, check out the Crypto Investor course where I update that for free with what's going on in the cycle and what I'm doing. Also, the exchanges I use, you can get deposit bonuses on them, so I'll leave them linked down below in the description as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.